Okay, welcome to Make HOAG Money. It's Thursday, September the 8th, 2022. Looking forward to having a great session today. Got a special guest with us today, Anne Marie Band. We're going to get her up here and have a good chat with Anne Marie today in just a minute. Just going to go over some of the business here, the CFTC disclaimer. There's a lot of risk in trading. It's not suitable for everyone. You should only be using risk capital, which to me is risk capital you can afford to lose. One of the reasons I love Top Step. We're going to be putting that risk capital up for you. Welcome everybody on YouTube, of course, as well as everybody in the Zoom meeting. If you want to be able to have the opportunity to speak someday and make HOAG money and to be able to vote on these trades, please join us in the Zoom meeting. Hypothetical and simulated performance results certainly have certain limitations, and to me, the biggest limitation is the fact that there's no accountability, no rules, and no consequences for your actions. There's, of course, no representation that we are going to make or lose money today. None of these are suggesting anybody else do anything that we're doing here. This is for educational purposes only. This is a live account, however. So we are, hoping that you're going to bring some good trades and make me some money. So the rules for Make HOAG Money, of course, are kindness and respect are expected above everything. There's always differences of opinion in markets. It's what makes them so good. We're going to have Anne Marie unable to talk today. We're all going to be involved in the decisions, and we'll always be talking about the context of the trades that we're going to be thinking about taking. You can use the chat room to help us discuss these trades. We're going to use the polling system in Zoom to be able to vote on these trades. We're going to be, of course, focusing on the E-mini S&Ps for opportunities. We don't have to trade. We don't want to trade just to trade, of course. So sometimes we do kind of get into that, just trying to keep things interesting here for Make HOAG Money. We're not going to be taking losing trades, which is, of course, a joke. Losing trades are part of trading and something we have to be able to wrap our heads around and move along from. And, of course, your feedback on Make HOAG Money is vital. Of course, we appreciate any feedback and ideas that you can bring to the table to improve Make HOAG Money. So we're going to get Anne Marie in here. I'm going to make you a panelist. And now you will be able to speak. You won't be able to vote, however, Anne Marie. If you're a panelist, you don't get to vote.
Okay, sorry. Yammering while I had the mute button on.
Well, that happens. It's part of the new paradigm of trading and working from home now, isn't it?
Yeah, absolutely. Not knowing how to operate equipment is my key problem.
I
So
think
I really appreciate being on here. It's exciting and it's fun, and I'm looking forward to watching the markets together and talking about them.
All right, I am too. I just came up with an idea for us, Anne Marie. We should patent and sell T-shirts that say "You're on mute."
Yes, absolutely. Regrettably, I'm sure somebody's already done it.
I'm sure, right?
Yeah.
If I've had the idea, it's already been thought up.
Yeah, mine too.
All right. Well, we're going to start here with do we take the opening range trade or not? Of course, we're going to be looking at it, and if it's bigger than 5 points, we're not going to take it. Just kind of going over the context. I mean, we had a big update yesterday. In the S&Ps, we added a whole bunch of new open interests, which tells me there were some real buyers in this thing yesterday. It wasn't just short covering people who were stuck lower. There were some buyers coming in. So looking at the opening range trade, we're in range, we're bordering on value. Not a lot of pullback last night until after the numbers came out this morning. What do you think, Anne Marie?
I was looking at the fade yesterday, and the big thing that I had been thinking about was all of the extreme data that we'd seen. I like to look at the weekly new highs minus new lows. Now, I've been looking at those for several days, and we've had no bounces until day before yesterday when it tacked a really extreme number at negative 2,500. And so for me, that's always a look for the floor because it's going to trigger some sort of snapback. And so I think that we're in the middle of that kind of snapback and coming off of all those extreme readings. So I expect us to find a floor and try to bounce. Now, I thought that floor would be somewhere around 39.58. So if we bounce above that 39.58, but we can't get above 39.65, we're probably going to give back a bunch of this because there's a lot of weight in the market. And we just saw that institutional hedges to the downside are 3 times bigger than has ever been recorded.
Wait, say that again?
Yeah, institutional put buy went to, so they measure it on a standard deviation. And so for the beginning of 2021, it went all the way up to, I don't know, positive 8 or 9.
Okay.
For the put buying, it's moved all the way down to negative 8. So there's a tremendous amount of institutional put buying. Now, what does that mean? If the institutions buy the puts, then the dealers are short the puts.
Mm-hmm.
If they're short the puts, then they have to short the ES or the SPX or the NQ or whatever they're trading, so they can be flat. What I suspect is a fair bit of volatility, so support to resistance trades feel like the very best type of motion to me. No trades that are going to run like the ones we saw yesterday. That being said, if we get up over that 39.65, then we're looking at the potential to hold it and then recapture the edges and move to the north. So while we sit in the limbo, I think it's a support to resistance kind of event.
So your 39 kind of 58 level right around here, you're looking at kind of a, I hate to say it,
pivot,
long above, short below.
Yeah, with a little bit of wiggle room, absolutely.
Sure.
And since we've broken it, really, why am I looking at 58? Well, it's how the month opened on the ES. And so if the monthly open isn't recovered after spending, let's see, 1, 2, 3, 4, 5, if there's a 20 hours above it and all of a sudden it collapses, that looks like a failed breakout. So it's going to find support underneath it. So my first inclination here is to sell any kind of bounce. And if I get stopped out moving up above that area, then I know that the bounce is going to hold. Otherwise, trend is going to be what we're looking at. I know that sounds awfully complex, but I don't really think the market is a nice, clean read this morning.
I would kind of agree with that. I mean, I was really hoping that we were going to open up in this area. Above where the market really started to accelerate late in the day yesterday.
Yeah.
And this could be kind of viewed as the base of a late spike. The late spike occurred early.
Exactly.
It found a degree of acceptance. Now it's experiencing a degree of rejection in that area. And where is that? It's basically right at 39.58, the level you're looking at, the beginning of the month.
Yeah. And I think Vince just said that Powell is still speaking. Is that, yes? He's still speaking?
I'm not looking at it.
Okay.
I'm here with us.
Okay.
All right, so here's the opening range. If it's less than 5
Mm-hmm.
and to the short side, if it opens right here,
Mm-hmm.
I like it.
Mm-hmm.
So we're already
Yeah, there's
at,
definitely short edges, right? I mean, they're fleshing it out. And because Powell is speaking, we could have
that's going
all kinds of,
to make everybody nervous.
yeah, exactly.
So we've got more than 5 points in this opening range trade already. As far as the risk is concerned, we're looking at about 10 points of risk. My thought is, if we break out the low of it and we get a chance to trim the risk by coming back inside the opening range, we look for that short because we're
Yeah.
below that 50, 58 to 55
Yeah,
level
I am
here.
definitely in accord there. Yeah.
All right, so let's vote. The question is, do we look for a short after the opening range breaks to the downside if it returns back inside the opening range below this 55 to 58 level? Anne Marie, I think your words carry a lot of weight here. We're 86% yes, but we're still inside the opening range.
Yeah. Let's let it shake out a bit. Powell's goal is, of course, to bring the market in. The goal is to bring the market in. And so, the question is, was yesterday short covering, or are people really chasing the market because they're still afraid that they're missing any kinds of bounces?
Mm-hmm.
And that's not a trivial question, simply because although sentiment is very bearish, there is still a tremendous amount of buying activity overall in the community, because in the trading community, because people are still thinking that, hey, there's going to be a possibility for a soft landing. And I think maybe there could easily be a possibility of a soft landing. The fact that people are not selling everything in droves also says that the majority of folks are thinking that way too. So this is a non-trivial space, but my supposition is still, hey, these guys are going to come in and flesh out support, and losing the monthly open at that 58 really tells us that our bounces should still be sell zones.
And there's kind of conflicting information from the S&Ps and the NASDAQ last night. And we were looking at, is this short covering or is this really buying coming in? Well, with the open interest in the S&Ps coming in at an additional 35,000 yesterday, where the NASDAQ comes in at minus 4,600. So there's conflicting information there.
Yeah, it's I don't believe we're sitting in trivial spaces. I really don't. Now, someone just made a very good comment. The dollar is rallying.
Mm-hmm.
If there's one thing that I've been seeing, is that inverse relationship between the rise of the dollar and the fall of the markets. What we have to look at is, let me throw up the dollar on the screen.
Okay. So we've taken out the low of the opening range just by a few ticks here. I'm going to see if we get a pullback to halfway. Mm-hmm. Let's go 39.49.50.
Yeah, the ECB said this morning that they're going to raise 75 basis points.
Mm-hmm.
And so that could push things. But yeah, I like that. I think we're doing...
And we're going with 56.50 for our stop.
Yeah.
let's see if we can get a fill here at halfway back.
A lot of pressure.
Mm-hmm.
But still, you know, sideways, we're really trying to hold that floor.
Yep, that's my brother Rick that's talking about the dollar index and how the Fed wants to keep the dollar strong. Now we had Daniel M. We're going to get you in to speak here. If not today, we're going to get you in to speak very soon. Daniel M. is a fan of yours.
Well, thank you, Daniel. I appreciate it.
He likes your book, which, by the way, I'm going to do a shameless plug. Here it is, The Trading Book.
It would be me. My plug would be shameless.
Well, then I get to do it. Get The Trading Book. It's Anne Marie's book, A Complete Solution to Mastering Technical Systems and Trading Psychology. Well, here we are. Come get us.
Chip, chop, chip, chop.
Angelina is asking where you find the hedge fund option positioning you mentioned.
You know what? I follow Twitter feeds that tell me about institutional buying. It's not really so much hedge funds, it's the big institutions like BlackRock, JP Morgan, Goldman Sachs, very big houses that have to release their positioning. So you can also find information on positioning at the Chicago Board of Options Exchange, CBOE. You can find that online. It is dated because they want to charge you lots of money.
Of course.
Get that.
They got shareholders.
11, I reckon. Yeah, exactly.
Okay, we're in now. We're filled here. We're short at 39.49.50 with a stop at 56.50. Trying to get into the short here halfway through the opening range to trim risk. We've looked below the opening range. We'll see if we take out the high of the opening range and get it back above that 39.58 area that we've both been looking at to see if maybe there's another opportunity. But we're going to see if this one works out before we discuss that. Shaw is saying he's halfway through your book right now. In a day, he said. He said it's very well written.
Thank you so much.
I did put the link for the Amazon thing to go ahead and get it.
So here's the thing. See how all the sellers came in right at our line in the sand?
Mm-hmm.
So they're on the hook. If they can't force us down, we're going to go through the tall 1 minute candlestick. And so from this perspective, you know, when we take, because we're not in a trading environment and the shorting action may or may not hold, we really came in to a space where we said, hey, decisions are going to get made.
Right.
And either they're going to make decisions in the way that we anticipated based on trend, or they're going to push higher. And that first wick down is where the scalper, if the scalper is looking at, let's say you're trading the ES or the NQ or something like that, and you are able to locate a region, and that region tells you, hey, this is the region where people are going to come in and immediately try to reverse trend, you have to start watching to see what they're going to do here, right?
Mm-hmm.
So in my mind, not being able to break either gives us a good sideways range that'll take us maybe to 52, but if we see how the scalper will have to take profit on the edge of those wicks to see how it moves.
Mm-hmm.
And so if we're sitting here and it actually does come all the way up there, well, let's hope it doesn't stop us out.
So do you think cannonballing along above 39.58 is a good idea?
Well, again, it's so sideways and
Right
there's a
here,
ton
right?
of negative pressure. Um, my see where the sellers are poking
I
around.
mean, we did trade basically right down to yesterday's point of control,
Yeah, let's
volume
see
point of
here,
control.
right?
Yeah.
Let's see here down at the bottom.
Mm-hmm.
In this kind of sideways formation, I would be, when I trade and I'm looking for something to break, what I will do is I'll say, okay, they have to show up here because that's where they've been showing up. So I'm going to scout this formation, take part of it off, and allow the chart to come in and then lose the low, and then I will add back to the position.
I
So
gotcha.
right down here,
You
it's
would,
given me a range where I'll say, hey, listen,
let's lighten
the
up.
bottom of this range, I got to take some profit. But since we only have one,
Mm-hmm.
and we're moving in the direction of relative trend, then we simply just wait for the formation to settle out. For me, although the term that you use, hey, I don't get any smarter after the trade.
Right.
Listen, that makes a ton of sense.
Mm-hmm.
Particularly when we're in a sideways patch like this. But if we're in a range,
We're
see
out.
how, right? That range-based formation tells us, hey, listen, we have to trade these edges and we can't look for, let's see where it goes. It's simply giving you what the market gives you in that particular space. Do you know what I mean?
Yes. So we're kind of dancing around our pivotal level here. Do we like the idea of looking for a long above it?
For me, my thought was the chart has to collapse near that 39.64-ish area. And so my thought would be, hey, if we're looking at a broad market, the next place the sellers are going to pop in is this 64.65 zone. So how do I work it? The same way I would work the one that we just looked at. Let's let it get into the area and then watch to see where the sellers come in. Now, I know the sellers are going to try and come in there, but I can't go short or I can't take a long until it confirms. So the base case of what we're looking at is you trade level to level on the basin. And what I was saying before the chart broke out is when you've got the sideways formations, if you come down to a support edge where you saw everybody else buying in the near term, like we saw in the 1 minute, see how they're going to try and fade this. Let's just jump back to where we are. I'm not used to looking at a 1 minute. So it's
Me either.
Yeah. So as we look here, what is this one?
This is a 30.
Yeah. So as we look here, you see the high of the prior 30-minute candlestick. Losing that high is going to tell us that there's weakness. As long as that holds, it's going to try and force its way up. But see, what we have here is an expansion candle. So it can move in either direction of pulling the chart wherever it wants to go. So could you take it above that and say, hey, listen, I'm going to have my 58 as the stop? Yeah, you could. But my thought is, listen, there are going to be sellers popping up in here. They're going to show up. Now, where will they show up? The first group looks like they showed up at about 39.68, something like that. 68. And so they're trying to push us off this level, but still holding that zone. So as soon as it expands over the range, it's more of a turn and flip. And so these are the hardest kinds of things to trade when you're talking to somebody about it and you're looking at something and you're saying, hey, listen, this chart is telling me X, Y, or Z, and then it completely turns on its edge the second it loses that low and then turns right around, right? Very, very sideways formation in my mind, which was why I said, hey, listen, the best way to trade this is just into its support zones or into its resistance zones and then letting the chart confirm. If I were sitting in the space right now, as it's moving up into these old wicks, I would say, hey, listen, if I'm thinking about a fade, it would be here, and I would want to watch it come back into 39.60-ish. If it doesn't, I've got more price action. So let's go back to that 1 minute and let's just walk through mentally what just happened and how we can look at something and go, all right, what am I looking for? So the first 1 minute formation, see how it starts losing that edge where I said, hey, listen, it's coming in and it's starting to roll over. And I said, hey, listen, I would try to short it right around here at the 66 area. I'd want to see if it would come into 60 and lose that zone. I already have the highs established. I know because it started rolling over. Exactly. I know that if it breaches there, I'm out. And if it holds, it's going to fall right back down into my old areas where I had congestion, which is really where our stop was.
Right.
At 55, notice all the way to the left pre-market.
Here.
Heavy congestion. That's where I'm anticipating that this rotates back to.
So would that be kind of a long zone for you?
It would.
And because it takes us back to that 58.
Exactly. And so the way I would engage is I would wait for it to get back there, and then I would watch for it to chop and hold. Now, here's the thing. Do you think you could maybe look at something like a 2 minute or a 3 minute? I'm having a panic attack.
Here's 5 if that helps.
Yeah.
I can go custom on it if we need to.
No, that's fine. 5 is fine. All right. So the big thing is, what are we watching the buyers do? And realize that in these early morning spaces, when we have a speaker, we have somebody parsing through all the speaker's words
Mm-hmm.
and then conveying information to the market, we're going to have ourselves a little bit of sideways pressure. And what we're looking at really is a chart that, where did it come in? To 61? 60, what is that number?
That is 61.
Yeah. So we see it come into that zone and then begin to bounce. What we're hearing them say is, at this juncture, you're not going to get your 55. That doesn't mean it won't come in. It means we've got to wait for the ideal space for the chart to tell us what's going on. And my thought is, as long as I don't break the high of the last candlestick, I still have an opportunity to stay short and wait for it to come in. As soon as it breaks it, I can turn right around and go long and then leave my stop at maybe the 65 area.
So right here, you're talking about if we take out the high of this 5 minute bar,
exactly.
We go long. Do we like that? Let's see if we can get a quick vote in. See if we get it before it goes away. Okay, it looks like we're getting it. So I just popped into a long here. Maybe not the best trade location.
Where would our stop be?
Well, you were talking back down to 65, right?
Yes. Yeah. That is my thought. And the micros give us that opportunity to pull back into that space. Here's the for me, what we're seeing is buyers and sellers fighting to get control of frame, right? And so on this type of formation, you really are in a coin toss in terms of where's my edge, right? And so our edge formations, oh wow, I hope this doesn't take us out.
Hey, it's part of trading.
It is. It is part of trading. Yeah, it's going to take us out.
And there it is. Maybe a little too tight.
Yeah.
I mean, I kind of like the long because we're back above that 65, 68
Yeah.
area.
And it, you know,
Or
it is gonna
55,
bounce.
58 area. We've got a weak
It is gonna
high.
bounce. Yeah.
Very prominent overnight point of control.
Crud.
Yeah, it happens. It happens.
Sure does. So now the question is where is it going to breach? Moving from outside.
Yeah, we were just a little too tight with that stop.
Yeah. All right, so now see to the left where you got your sides. See all that congestion? That's gonna get us another fighting zone. So we really, again, this is another coin toss event that says, hey, we could move over, but there are a lot of sellers sitting above us, right? So we've got, what does that tell us? We've got 74 all the way to 75, 75. And again, you know, when we're trading the micros, these are small increments sideways. Do you see how price is dropping like that? It's just, it's running all the stops into the edge of the shorts and bringing them right back into the floor at this support area, but that's never really good for buyers because it always means supply is sitting really low. And we can see that too if we've got you know, time and sales around. We've got a few hundred lots floating in the edge.
I'm just doing it on the micros here.
Yeah.
So I'm going to filter it up to about 20.
Yeah, that's good. Yeah, we've got ourselves a little bit of a coin toss. Because if you're taking a look at something like a 30-minute chart, it's going to tell you, listen, you're bouncing into resistance right now, and you're heading up over the edge of your prior candlestick. You've moved above it by more than 50%. And so the buyers are saying, hey, this is strength. I'm going to hold this. The sellers are saying, hey, listen, I've got heavy congestion to the left. I'm going to throw those orders in and see if I can push you down. And so this battleground here, super hard to go, hey, let me pick a side, because it does end up being a coin toss. The edge that we have to establish as traders is, where can I see something happening that I think the majority of people can't see happening? And there's really, it's really firmly divided down the center. And that center point is still, hey, I'm going to sell it if it bounces, and I'm gonna buy it if it fades, because it's essentially caught in a range. And the moment we get up over that 58 and we hold the monthly highs, there are algorithms that go, hey, listen, if this price action holds for 30 seconds, we're just going to start buying 10 lots, right? And so that sort of algorithm will push price action and make all the sellers move out of the way until the next resistance zone. So that's normally the quick snap kind of motion. So what might be interesting for us to sit back in retrospect and say, all right, yes, we talked about the opening range when we come in, but is there a trade that gives us an edge that says, okay, we take it if it does this, but what about X? Do we buy it on the break? Do we do a 30-second count and then buy it on the break of that 30-second, which is another way. One of the guys that I know that scalps does it. He waits for price action to hold for 30 seconds and then he just chases it wherever it is if it's come off of a main level. So something to add to that thought of, hey, where did we open the month? Are we close to it? And then, what might essentially happen here. And we can see the wicks are completely getting sold off. So we know that there's sellers above us. We know that they're there. The buyers are just trying to hold the floor. And so, what is this, a 5 minute?
Yes.
Go back to
yes.
30 again?
This is the 5.
Yes, maybe look at the 30 again.
Of course. You gotta find it. There it is.
Okay.
So there. Yesterday's range.
And what is the number 72 that we've got here?
VWAP.
Oh, that's just the price?
That's VWAP.
VWAP. Okay. All right. So
I believe it is.
I believe it is. But below the VWAP.
Yeah, that's VWAP. Oops.
Right. So my thought is that we should fade back down into the space, but again, because we're sitting in legitimately a crapshoot area, the best things to do when things are sideways, like we see them being, is work on those edges.
Mm-hmm.
Right? And so here, we should fade. I really think we should fade. So, what would if I were here, yeah, you just have to see more of it lose the edge. The sellers have got to give up that 70. Legitimately, if you said, hey, listen, I'm going short, you've got a 10-point range, right? Because it's going to go all the way up into, what is that, a standard deviation band of some kind? This purple?
This one, yes, first standard deviation.
Okay. Yeah.
First standard deviation is about 81, which gets us pretty close to the prominent point of control from the overnight. The other thing that I think, maybe many traders are kind of focusing on is the fact that we had an unfinished upside auction in the profiles yesterday. We have a weak high here. And then, we looked above it in the overnight and weren't able to hold that.
Yeah, I mean, and they are really pressing. Look at the acceptance that's building right there.
Mm-hmm. Yeah, we're seeing, volume point of control up here. Now we've got another TPO here. We've got a lot of
Mm-hmm.
excess that's quite possible to leave below.
Mm-hmm. My favorite thing to do, you see how it's sitting right here, where if I'm looking at something and I say, all right, am I inside of the noise? I clearly am, right?
Mm-hmm.
If we're looking at price, I'm inside of the noise. So I either hold and go to the top of the noise, or I break and reject all of that noise. The overall trend, if we just look at the last 2 days, has been upside
Mm-hmm.
and then sideways and then the break. So the first thing I'll anticipate is, you know what? I'm going to go short on the edges of those 30-minute candlesticks. I'm going to let it come in to my support area, and I'm just going to, what would my support area be? It would be where all the buyers were sitting around at the last 30-minute candlestick. So if you look all the way to the left, where the green is ring near price, up there, you see where that candle closes or it comes into the high, near where price is right now.
Right
That's
here.
going to be my first target, right there. Right? And so always, the reason I look at the 30 is because it gives me way more information I can use
Mm-hmm.
versus a 1 minute.
Oh, I'm a big fan of the 32.
And so the reason that I stick there in that 30-minute to help me lose my discombobulation that I get on tiny time frames is really because the open and closes of those candlesticks are paramount. So the first thing I will do as it comes into that close, I will take some profit off. And I will say, all right, I don't really like the fact that it bounced up that high, but I'm going to stay short off of my 39.74-ish area, 39.75-ish, where you see the body of closed candlesticks at about a little before 4 a.m. Yes, right there. See, the reason that I would take it is because that first 30-minute candlestick shows a wick, and that wick, not that one, yeah, that wick tells me my stop. That wick tells me, hey, if it gets above there, it could run another 10 points against you. You just got to get out.
Right.
And so now I would be here, and I really would be saying, wait, what surprised me? My 65 area holding surprised me, so I'm getting out. And I would be flat right there
Okay.
on those edges.
Okay.
Because I'm constantly moving between what is my 30-minute candlestick formation telling me? Where has it opened? Where has it closed? And do my wicks give me the kind of support slash whatever that I might need, my risk event? So we noticed from this one that fell very hard early in the morning,
Mm-hmm.
where we had our first event come right down into the support zone and then turn around and move right back up. I leave it on the 30-minute because it tells me, hey, listen, as soon as you close over the close of the prior candlestick, it means people are going to try and buy that formation. And so if I look at the low of that prior candlestick, it frames out my stop. That would be the first, that would be let's see, it looks like the candlestick 2 candlesticks ago.
Here.
Yeah, that one. The low of that candlestick is going to be my threshold. I'm going to go, not the big one, that one. Yes, because it's the prior move I'm always measuring myself against. I'm going to take it if it breaks down, but I'm going to get completely out of it from a short perspective, which is what we did,
Mm-hmm.
right?
Mm-hmm.
From that space. But then immediately I would look to go to a long. And unfortunately, my eyes were not focused on that 30-minute formation like it normally would be. So notice where I said I would have gotten out. The price has come in a little more, but you can see all the fighting there.
Mm-hmm.
And it's, to me, I equate that with, all right, it's the open and close of two particular candlesticks, and those guys are going to war it out until somebody wins. And so where is that somebody wins event? If it gets up over that same candlestick that created the long in the first place, that's getting up over, see the red one? The red one just before it. See the high of that candlestick?
Yes.
That's going to be the war zone that if they take over, that would be the floor. That would end up being my floor. Right now, they haven't taken over. The sellers are still in charge.
Mm-hmm.
They're still trying to force price down. And so that edge, until they define where it is that they're going, that edge for me is going to go, you know what, I'm going to wait this out. I'm going to give this chart, maybe another 15 minutes to see what's going on, see if I make a lower edge that I can buy again at the bottom of that 39.55, or is it going to pop up? Right here, It's a coin toss because I don't know who has the strength. I can maybe theorize, hey, my low is 39.58 on this new candle. I could say, hey, I'm buying it, and that'll be my floor, and I'm just going to run it up the flagpole. That would be fine, but it is a coin toss trade, literally, because the seller can also be at 65 saying, you know what, I'm just going to sell it off right there. And we can see that's the battle they're still having. So when you make the choice and you go, okay, I'm looking at my 30s, I can see that I've made a floor on the current 30. If I go, hey, I'm buying this, you know that that floor is 6-7 points away. Your ceiling isn't that far above you.
Right.
Because you can see it selling off there. The break out of the zone, like, if we had left that stop wider, and I could tell by your voice that you wanted to leave the stop wider.
Yes.
As I think through everything. So, and that's really when two people are talking about stuff, right?
Sure.
We throw it back and forth, and that's always, as a trader, talking to the folks that are sitting in the room, as a trader, you have to engage in absolute critical thinking that says, here is where they've been, so that's going to be my floor. Here's where they're going, that's going to be my ceiling, or vice versa, depending on what direction of the trade you're holding in. But you can see my reasoning for, hey, listen, I'm short at the loss of this congestion of the candle bodies. I'm going to go down into the next congestion of the candle bodies, and I'm getting out of the trade. Because those are the only places that I see edge. That's how I define my edge. And so if you say, hey, listen, I'm going to look at this, and this, a lot of times when you're focusing on a lot of information, our analog brain doesn't do well with digital motion. And all we are is digital motion. Now notice, if you had taken the long up above the high of that red candlestick that I showed you, right? Not that one, the next one. Yes, that one right there, the high of that area where the buyers took over, and you use the floor of the current candle as your stop, you'd be sitting in a trade where you go, okay, I got to make a decision, because you're back up at those wicks again.
Right.
In the congestion that created the first short, you can go, hey, all right, I'm going to take half my position off. I'm going to raise my stop. Now, a lot of folks who have maybe looked at my Twitter feed or know that I work with Tom Hoogland's Coogan's stuff, you know he adds to positions aggressively, and I'm talking about pulling a position off. The only place you add to positions aggressively, in my mind, is when you break out of the formation and you move to something that's got trend. And right now, I'd be hard pressed to have a specific trend in one direction or another right now because it's a mosh pit. So I would say, hey, you take half your position off and then you raise your stop to somewhere break even, so that if it does break even, you aren't down, you still collected something, and then you can reset in the formation, not leave your initial trade on with the same low stop, because then you've worked for nothing. You raise it up so it's flat and you go, you know what, I'll reset. And so if you did raise it to a break even, which is the top of that wick on that 30-minute, you're still in the long half position right there, because you raised it to break even, right there at the top of the wick, so it'd be just up a little higher, yeah, right there. And then you just wait for it to do its thing, because it's going to do one of two things. It's going to fade and stop you out, or it's going to continue and hold a higher low and break through the heavy congestion. And so now we just sit and wait. So, of course, it's a little infuriating if you're in a make HOAG money space and you're going, hey, I want to trade. It's about the structure of the formation rather than only looking at, all right, let's take a break above this price. The question we have to always ask is, how did we get to that price? And in that space, is it reasonable to assume that breaching it is going to give us the outcome, or do we need to see what it did the last time it did at that price and then follow along from that perspective? See all the sellers piling in on your dome. I could see them right there trying to position just a few of them up at that region, but you're still hanging on, right? You're still hanging on. You can look at the trade and hold it from that perspective. Now we're about 12 minutes into this 30-minute candlestick, so you might go, wow, I gotta wait until the next thing. And really, sometimes you gotta wait. I mean, Jesse Livermore says that, he said that waiting was the times where he ended up making the most money, is if he waited for price action to define itself. And so we're sort of still waiting on that. So, the question might be, all right, here we are down at the 65 again.
Right.
Is it something that says, hey, okay, so it would have stopped us out for that long, we would have been flat. If we say, okay, if that stopped me out, the assumption is that it's going to head lower, right? That may or may not be true.
Right.
Right?
Right.
Again, I can hear from your voice, or maybe the not the voice, something, because I listen all day long for a living.
Of course.
So I can hear you go, maybe that stop again should be wider. Certainly. If we had left the stop at 39.62 and kept within that frame of, okay, you know what, maybe I leave it just a little wider, then we'd still be in the trade. But the question remains, if we're strong, should the chart have done that in the first place? And the answer is, well, probably not. So it still puts us in this very sideways patch.
Do you feel like sometimes, especially when we're not very directional, the better trade location is to look for your entry and where your stop is going to be, and get in at your stop level?
Yes.
Because I was looking at this profile here, And that last, well, the move down previous to that, we traded all the way down to 59 quarter,
Mm-hmm.
and coming up to the bottom of this high volume node into this low volume area, sometimes I can find really good support there.
Right.
And that kind of lines up with your area here, which is a little bit higher, but where our stop
Yeah.
would be, well, let's see.
Yeah, I think we had used the bottom of this candlestick as the stop initially.
Yeah,
And I
right.
said, hey, let's move it up to yeah, so the bottom of that candlestick shows right about where all of that action still sits. So again,
Mm-hmm.
remember, and of course I'm talking to you, John, I'm talking to everyone else
Mm-hmm.
that
Of course.
wants to hear about that. When we think about the trades we're going to engage in, the question always has to be, if I did this trade 1,000 times, would I overall have an outcome that I would want? And that expected outcome is where you find, okay, where's my edge sit?
Mm-hmm.
Where does edge sit? And that will keep us sitting on our hands maybe a lot more than normal, right? And so the reason that my problem was I overtraded when I first started trading.
Didn't we all?
And it would break my stop and I would jump right back in because I would go, you know what, I just put my stop in the wrong place. And what I began to ask myself was, okay, if this is a valid stop, and I want to prove out in the future that I've picked a valid stop, what should happen in the future? And let that sort of thing play out and get a chance to understand price better than just responding to ticks. Oh, that happened, I'm in. Or that happened, I'm out.
Right,
or
right.
whatever else we do. Well, John seems to have the voice of wisdom there because had we never
This
discussed.
time.
Well, there's a lot of wisdom to that in
Mm-hmm.
terms of
Mm-hmm.
saying, the question then is, if I get stopped out and I see the price action holding when I think it ought to break, should I jump in where I jumped in, before?
Mm-hmm.
And, so much about trading is subjective that it's very hard when you're trying to learn from someone, like learn from me and John and whoever else is sharing information. It's very, very hard to go, okay, what am I going to take away that works for me in this particular space? And the bottom line is, if I take this trade, do I have an edge in the overall market frame to go from A to B? And if we're trading micros, we are not in a trending environment. So we'll be moving in and out and in and out. If we're looking to learn with micros, you want to work on the edges of your support or on the edges of your resistance. And because that's going to give you either a place where it absolutely fails, and you go, okay, I'm out, or it'll be a place that you'll have a good trending motion and you'll be able to make a little bit more money in terms of, getting yourself to wherever you want to be. What would you say to that?
Can you do me a favor and
Of course.
we talk about edge? What is an edge to you?
Okay, an edge to me is a place where I can definitively see everyone moving in the same direction. So remember when I said, hey, listen, I'm going to take that short at this 39.75, 39.74-ish area,
Mm-hmm.
whatever that
Mm-hmm.
was?
Mm-hmm.
Okay. What I did was I looked to the left and I saw that in the most recent past, I had three 30-minute candlestick bodies that all resolved in the same direction, up. Now, what I did then was see all of that failure at the first big red bar that collapsed all the way down.
Here.
Yes. So it broke that edge. Everybody said, hey, I'm going to buy. So the psyche of the trader is now, holy cow, that's not going to work. I'm going to short that when I get there. So for what I do then to find my edge is, okay, I know what the traders were thinking when they bounced. I know what the traders were thinking when it fell. And so I'm going to guess that I think that they're going to go, holy cow, they're going to try and collapse because I made a lower low. So I'm going to wait until, can I ask you for your mouse?
Yeah, of course.
Yeah, I think I just asked you for it.
Approve.
Did I? Ta-da! Click. Okay, so can you see
Yeah.
my mouse?
Yeah, you're in control.
Ha! Oh, and it's a little. Ooh, it's the Dark Knight mouse. It's a black mouse. Okay,
It's
so
big. It's big to make it easier to see.
great, perfect. All right. So here we are in this edge. They're resolved up. So traders are going to think. So the short answer to the question is, how do you get edge? By thinking about what the traders are going to do and watching for them to confirm or deny, and then you follow along. So here's why the trade opened up for me. So I'm sitting here in this area and I watched this. I'm here at the real-time event when that closed. So I watched this and I said, oh, all the traders said, oh, we're going to resolve. And then it comes down here and they try to buy it, but it falls through the floor.
Run all the
A
stops.
significant amount. And so the traders are like, oh, I'm scared. Plus I made a lower low and now it's bouncing back up. Well, over here, they thought it went up and then it went down, and that's really two emotional candlesticks. So I'm going to short here. So I don't short immediately. I wait to see if what I'm thinking the traders are going to do, I'm going to see if they do it. So I wait until this candle closes and the next candle opens and I watch it bounce and I watch it fail and then I take the short. So now I'm thinking to myself, okay, we have short traders who want to go short continually. We have long traders who are trying to pick up the floor. So where's the first place they're going to battle? They're going to battle at the high of this wick right here. And so either they battle and they win, or they battle and they lose. So this is where I clean most of my position, all of it, actually, because we talked about why I would raise a stop.
Right.
So now, if you're thinking about, okay, I'm out of the trade. What are the traders thinking? This is where you develop the edge. Okay, they were up, then they were down, and then they had a great spike up here, and then they came down, but now they're holding a higher low. And so if they're holding a higher low, there's some buyers thinking everything's going to go okay. So even though I had a short here and closed it, what I want to do is make sure it holds this open close, and I'm going to go long over this wick. Granted, I got 5 points of a stop, maybe 7 points of a stop, but I'm going to go long because I've got a higher low, and I'm not losing the floor of the open and closes of my 30-minute candles. If I start losing that, then I'm going to get nervous. I'm going to trim. If I have a long and it loses this area, I'm going to trim half my position because I don't want a full bore loss right here. I want it to lift, and then if I lose, I want it to be a flesh wound where I can go, you know what? It's okay. I can get back in. I don't want a gaping hatchet to the chest.
Right. You'll give up the worm, not the rod and reel.
Exactly. Exactly. So now, if you had, there's weakness because they're dancing all around, but the way you develop the edge is go, what are the sellers doing? What do they want to do? And where will they try to do it? They're going to try to do it at the highs, at the lows, at the open and closes of the candlesticks. Your thought should always be, if I engage at the open or close of a candlestick at the next edge, where is the risk in the direction of my move, and can I handle it? If you're thinking to yourself, hey, this is a short, well, the second it starts creeping up over here at the 65, 66 area, you're flat out wrong. Because they've come in and said, we might let it come down a little bit, but we haven't lost this edge, and so buyers are in charge, right? Just like if we look at this right now and we go, okay, what's going on?
Mm-hmm.
Buyers are trying to assume control. Now, they're below the high of the prior candlestick, so the question is, how are they going to behave at the test of these two candlesticks? And what have you seen? Well, we've seen a lot of sideways motion, but at the test of the candlesticks, it looks like they're trying to hold. So what things do I need to consider? Well, the VWAP is at 72. I'm inside of the edge. People dance back and forth around the VWAP very often. So if I take a long here, and I feel I am right to take a long here, my floor shouldn't be any lower than this low part of this wick, all the way over here, where all the buyers came in.
So 69, 50, 69.
And then, yes, and then my target is still limited. I do not have a breakout formation. High, low, lower high, lower low.
Right.
And so the framework is building like a short. So if I take the long here, I'm expecting range expansion, but I have to take profit. Look, wick of the 30-minute candlestick formation. Let's say you were looking at this wick up here, or these wicks, which are closer to the bodies of the formation. You can look at something like that, right? And so you might go, hey, that's where I really think we're going to go. And as long as it doesn't break your support, you can hang on to that, because, I mean, if we look at these, we are building acceptance through these areas. It's just how long will that go for? But see, that's what you'll do. You'll look at the 30-minute, you'll go, okay, what are the traders thinking? Well, they're thinking if they get up over there and they just made a higher low, then they're going to try and push it. So where would my floor be if I tried to get in? Well, if you give it a little wiggle room, you probably need to be around 70. But you really don't want to pick it up here because there's nothing but noise.
Right. So that's when you come into demanding good trade location.
Exactly. And so if you sit here and you go, oh, all right, well, I see it there. It could go, but the first thing it's probably going to do is bump into sellers, because here we have a little bit of a mishmash. This resolved down, this held, it resolved up, and then it resolved down, right? So in this resistance area, I have just as many candlesticks that tried to break out as candlesticks that broke down. And so I'm going to go, well, that's sideways. I'm not getting on there. I'm going to wait for it to come back in. Now, it might not give us a shot again, but it did come into about 76 or so. A little bit. Now, if you can look at 2 time frames in a row and you like that sort of thing, then that's great. But for me, there's so much noise on those tiny candlesticks and so many one-off orders that just throw me out of rhythm. And for those of you that don't know, I actually sit on the autism spectrum. And so I have to pull in the amount of what's the word? Sensory information to help me make the good decisions that I make. And when I have when I have very minor sensory information, like with the 30-minute, I'm able to come to much better decisions that minimize my risk and allow me the opportunity for
Greater profits.
Exactly.
I'm so with you on that.
Yeah. Well, I have run on like a broken tap for about 20 minutes.
Well, that's all right. I think we all appreciate it and we all learned a lot. We had a couple of trades today. No big deal. We took a couple of losses. We've got next Tuesday to see what happens then. Anne Marie, I can't thank you enough for joining us and for your tutelage today.
Pleasure.
I'm looking forward to, continuing to have you with us whenever you feel like whenever you feel like you want to. And I've gone a little bit long today. I apologize if I'm stopping on anybody's day here, but they're getting a lot of good stuff here. So, and again, I appreciate it.
It's my pleasure. My pleasure. If everybody just practices with that and realize that less is more, certainly I've always been a little bit of an odd girl, so I do things just a little bit differently. But trading is individual, so feel it out. But realize your decision to act must come from you answering proper questions. It is not, hey, what am I going to do? It's, hey, what are they doing? And can I follow along? Because we're going to be the best, to make the most money, we are the best followers. We can't move the market, but we can watch the market move and tag along.
Thank you very much, Anne Marie.
My pleasure. My pleasure.
All right, let's call this a session. Again, thank you everybody for joining us. I really hope you enjoyed Anne Marie and appreciate her time. And I know I certainly appreciate your time, Anne Marie. And I look forward to talking to you again soon. Trade well, everybody. Have a great trading day. We'll see you soon.
Thank you so much, everybody. Bye-bye.